Mike Briggs is our cattle market analyst this week. The latest Cattle on Feed report shows Nebraska and Texas tied for the top spot in number of cattle on feed as of February 1st. Both states had nearly 2.5 million head in feedlots of more than 1,000 head capacity. Kansas ranked third with nearly 2.1 million head. For consumers, the first month of the year didn't offer any relief. Ground beef opened 2015 with a new high, averaging nearly $4.24 per pound during January. The price was about 77 cents more expensive than January 2014. Unfavorable weather chased us inside when we talked with Mike Wednesday morning. We began by asking him to recap the first 2 months of the year.
January and February have been a little difficult because we've had a lot of things, previously a lot of things have gone our way. Corn went down, cattle went up, it's been a great deal. Well, after the first of the year now, the boards rolled over on us. Mother Nature's kind of dropped hammer on us. And you've seen a pretty big decline in demand for various reasons. You've had a port closure on the West Coast. On the East Coast, those poor people are buried. And that's where most of the people still live, everybody has to remember. So it's really hurt us demand-wise. And you've had the funds bearing down on the futures market, and it's really caused some problems. You also have probably some of your highest break-even cattle that you bought in the fall because you were making a lot of money, and gosh, it looked like there never was going to be another bad day. So you've got your highest break-even cattle coming out now that have also gone through the worst weather, going into probably the poorest market we've had in however many months. And so you're starting to see some potentially large losses in the cattle feeding industry, which you have not seen for a year.
Let's go into a few of those things. Let's start, because we did last week, or the last time you were on, with funds. Tell me how they've moved their position from the last time we talked and how it's affected the market.
Well, you've seen a lot of things going on. It seems like they're trying to use the futures market for something it's really not. Oil has done a dive, and so oil commodities are going to be down, and so they've pounded on the cattle because the oil's down, and pounded on the cattle because, well, commodities are going to be lower this year, and as a commodity hedge, and okay. And then, the way they trade on charts. Well, the charts look poor, so they just keep pounding on it. And it's like we talked last time, we haven't made any more cattle in the interim. Now, there's things in there that, okay, you had the inventory report come out, and there was 750,000 more cows, heifers, and everything retained than they thought there would be. Well, if you didn't see that coming, you weren't paying attention. Now, where I think people get a little bit out of line is they're just going to assume that it's going to stay at that rate. No, it's not going to stay at that rate. But yeah, you've seen your smallest cattle supply, so well, that means it's going to be bearish from here. It doesn't happen that fast, but that's what the funds have done, and they've pushed this thing down to the point where, once again, we've got a live market up here and a totally disjointed futures market, and it makes no sense to me.
So if you believe that it's still running on fundamentals, how do you see it moving here as we go through March and April?
I still think, there's never any fat cattle in March. So why would there be fat cattle this year when your numbers, quite possibly your slaughter numbers at times, will be below last year? So you're going into spring. If Mother Nature ever decides to get up off of us, I think you're going to see a big bunch of demand. I think there's going to be some pent-up demand out of the east, hopefully a little bit of pent-up demand for the export market because of the port closure. You'll see some demand there and just your regular upswing anyway. So if the weather straightens out, cattle supplies are going to be tight. I think you're going to see this thing catch here and gradually go higher. Now, hopefully it's a grind higher. Hopefully it's not a big quick up, because then you usually get a big quick down. But I still think the spring's going to be okay. Now, are you going to run it back to $1.70? No, probably should have never gotten there in the first place. That's part of our problem.
Tell me more about margins and how much they've narrowed, and then you're concerned about going forward.
Well, margins have really gotten hammered because, once again, you've had your highest break-even cattle coming to the market right now. And the weather since the week after Christmas has been not very good, and in some cases really bad. I know in the northeast Nebraska, they've had it worse than us, and we've had it worse than anything west of Grand Island. I don't know if they've even seen a snowflake hardly, but these yards over here, there's been a lot of mud. You've had a lot of it in southwest Kansas and northern Texas. They've had a lot of snow, a lot of cold, bad pen conditions. We saw weights drop precipitously the entire month of January. Slaughter weights dropped precipitously the entire month of January, the first couple of weeks of February, and then all of a sudden we've had an uptick. And That bothers me a little bit just because I don't understand it, because you're certainly not going to see that out of this feed yard because you just haven't been able to put the weight on the cattle. They've used a lot of that feed to stay warm because we've had a lot of really cold days, we've had some moisture, we've had some bad pen conditions, and so you've seen the performance of these cattle go down, because part of where the profits were last fall, had tremendous weather, we had tremendous performance, that puts a lot of dollars in people's pockets. Well, that's done a complete 180. The performance is horrible, and so that's gotten into your margin, and then you've got high break-evens, and then you've dropped the cattle market 10, 15 bucks in the cash.
What are we talking losses of?
Oh, I think you could see some significant losses here. If we aren't able to stabilize this thing here around 157, 158 in the cash and get it pushed back up above 160, you're going to see some $15, $20 100 head losses. It's going to hurt pretty bad.